In today's show, Bitcoin price slips below $34,000 again. What are the key levels to watch out for? In today's show, I'll be breaking down the latest technical analysis. And as Lex Mavosky points out, Bitcoin miners aren't selling now. We had a small spike in selling pressure from them 3 days ago, but it's back to normal now. Data from both Glassnode and CryptoQuant, whatever selling pressure we're having now is completely on us. And as Alistair points out, reason I am buying, not selling Bitcoin, central banks are still printing money. The 1-year HODL wave hasn't reset. Inflation is coming, no climatic top, peak FUD, banking adoption starting, and event-driven dips historically fully retraced. Also in today's show, these entities are buying the Bitcoin collapse, according to on-chain analyst William Clemente. That's right, the analyst who continues to build his following with his timely on-chain signals is unveiling the group of investors who are buying the big Bitcoin correction. Also in today's show, Bitcoin could be a better store of value than the dollar, says Singapore's largest bank. That's right, Singapore's largest bank, DBS, may favor Bitcoin over the US dollar as a store of value. The chief investment officer at DBS recently published a note to investors which makes a case for Bitcoin as a more effective store value asset than US-based fiat. Also in today's show, will the Bitcoin price still hit $100,000? Crypto analyst PlanB analyzes the state of the Bitcoin market. That's right, in a new interview he did with Scott Melker, the Wolf of All Streets, he emphasizes he believes that his stock-to-flow models, which predicts that Bitcoin will eventually hit $100,000 and $288,000 are still intact. I'll be breaking down the highlights for you here in today's show. We'll also be taking a look at the overall crypto market. As you can see, Bitcoin, Ethereum, and all the major altcoins are currently correcting and in the red. But where's the Bitcoin price likely to go next? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium Crypto News Alerts every single day, including weekends, just like this. And before I kick off today's show, today's episode is brought to you by our sponsor, BlockFi, the leading provider of financial products and services for crypto investors. Here's where you can put your crypto to work. They're currently paying out a 5% annual percentage yield on Bitcoin, so you can literally have your Satoshis work for you. You could also earn 10% APY on stable coins, and they are backed by the biggest names in the industry, including Winklevoss, Fidelity, Morgan Creek, and Coinbase. And they have a special promo running right now where you can receive up to a $250 crypto bonus with a deposit of $100 or more. All you need to do is click my referral link in the description right down below. Once you do, you'll notice a referral code already pre-populated for you to take advantage of this special bonus. So what are you waiting for? Click the link right down below, claim your free bonus, and let's start stacking those sats. Shall we? All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. The Bitcoin price is slipping as I'm recording right now. In fact, the price just fell below $34,000 on major exchanges, including Binance, as the Bitcoin market's corrective phase continues. Large inflows of Ethereum into exchanges were spotted before the latest downturn, suggesting that Ethereum whales might have led the most recent sell-off in the market. Right here on your screen, you're looking at the Bitcoin one-day price chart. Now, what are the key Bitcoin levels to watch out for? In the near term, the major macro level for Bitcoin and Ethereum remain at $30,000 and $2,000 respectively. And according to traders like TraderKoz, if Bitcoin can remain above $37,000 throughout the weekend and recover to around $37,005, the chances of overtaking $42,000 become high. The $42,000 level is currently the major resistance area, and rallying above that would increase the chances of newfound rally. However, if Bitcoin remains below $37,000, the likelihood of a range between $30,000 and $35,000 would increase sharply in the short term. Checking out this tweet from TraderKoz, Bitcoin, we had a nice daily open leading to a sweep and reclaim of yesterday's daily open. If we can flip the mid-range, I like our chances of pushing to $42,000. Then we have Eugene NG, the head of business development in Asia at Gemini, said that systematic algorithms turned short, and during the weekend, Bitcoin and Ethereum are likely to see bigger drops than previous lows. Checking out his tweet here, systematic algorithms have turned short to an illiquid weekend. Expect a retest the lows in Bitcoin and Ethereum in the next 24 hours. Remember to set some buy limits when that happens. So there you have it. The market has been weaker than many traders expected as technical analysts anticipated consolidation until the US and London markets opened on Monday. It's crucial for Bitcoin to retain that $33,000 support level to avoid another test of the $30,000 support area in the near term. How many of you feel will break below $30,000? Let me know your thoughts in the comments below. As you know, that's the recent low to keep your eyes out on. And on May 21st, analysts at Wellmap, as I shared shared in yesterday's episode, identified $39,931 as a large whale cluster after spotting inflows of around 115,000 BTC. Hence, to recap, 33,000 and 35,000 remains crucial support levels in the near future, while 39,931 and 42,000 are the major resistance levels. But one silver lining in the market is Bitcoin miners are currently not selling. According to trader Lex Mavosky, as he shares right here, Bitcoin miners aren't selling now. We had a small spike in selling pressure from them 3 days ago, but it's back to normal now. Data from both Glassnode and CryptoQuant, whatever selling pressure we're having now is completely on us. And as Alistair points out, reason I'm buying Bitcoin, not selling, central banks are still printing money. 1 year HODL waves hasn't reset. Inflation is coming. There's no climatic top, volume, or speed. Peak FUD, fear, uncertainty, and doubt coming out of China, as well as with the energy consumption, etc. Banking adoption starting, and event-driven dips historically fully retrace. And before I break down our next story of the day, these entities are buying the Bitcoin collapse, according to on-chain analyst William Clemente, as well as Bitcoin could be a better store of value than the dollar, says Singapore's largest bank, as well as will Bitcoin still hit $100,000? Crypto analyst PlanB analyzes the current state of the Bitcoin market. But first, let's take a quick look at the overall crypto market. We can see Bitcoin down 11%, trading just above $34,000. We have Ethereum down almost 19%, trading under $2,000. We have Cardano down 23%, trading at $1.16. We have XRP down 22%, trading at 72 cents. Dogecoin down almost 15%, trading under 30 cents. And Binance Coin down a whopping 25%, trading at $240. We all know when there is a correction, the altcoins get wrecked the most, so be very careful at times like this with extreme volatility. All right, now let's break down our next story of the day. The analyst who continues to build his following with his timely on-chain signals is unveiling the group of investors who are buying the big Bitcoin correction. In the latest installment of the Pomp letter, William Clemente says that a significant portion of the BTC that was sold during Wednesday's collapse that saw Bitcoin crash from 43,500 to 30,000 came from short-term hodlers. Interesting, right? Quoting him right here, by age, the cohort I saw that the largest uptick in selling was from coins aged 1 week to 1 month old. As you can see right here on your screen, the on-chain analyst adds that the entities that did the most selling on the day were large Bitcoin whales who unloaded tens of thousands of BTC. Quoting him again here, by size, the cohort I saw the most selling was from entities with at or over 100,000 BTC. This cohort was reduced by 89,000 BTC on Wednesday, as you can see right here, brought to you by Glassnode Analytics. And for the buyers of the massive Bitcoin supply, Clemente highlights that a new breed of whales absorbed most of the selling pressure. Quoting him here, the cohort that did the most buying throughout the dip was entities holding 10,000 to 100,000 BTC. This cohort added 122,588 BTC to their holdings in aggregate on Wednesday. One interesting note, a lot of buying was coming from the West, which is the United States. I say this because at one point during the bounce, Coinbase was trading at a $3,000 premium to other exchanges. This means Western buyers on Coinbase were spamming the green button, and since Wednesday, exchange flows have normalized and are no longer bearish. Over-the-counter desk outflow spiked during the dip, showing strong buying from high net worth individuals / institutions. As you can see right here on your screen, it shows you the Bitcoin supply held by entities with a balance of 10,000 to 100,000 BTC. Clemente is also looking at the volume distribution of Bitcoin prior to the correction. According to the on-chain analyst, the heavy volume distribution above $40,000 suggests that BTC is in the mid-cycle accumulation of the bull market. Quoting him here, over the last 2 to 3 months, there was a ton of volume in the $40,000 to $60,000 range, especially between $53,000 to $58,000. Over 25% of the supply has moved above $40,000 in total. This is what the current on-chain volume distribution looks like, as you can see right here on your screen, brought to you by Glassnode Analytics. And to compare with the previous boom cycle, the on-chain analyst shows the weak volume distribution to Bitcoin when the leading crypto topped out in 2017. Quoting him here, this is what distribution looked like at the top in 2017. As you can see right here on your screen, the on-chain analyst also highlights that when Bitcoin topped out in 2013, the volume distribution looked weak as well. This is what the distribution at the top of 2013 looked like. And according to Clemente, the current volume distribution does not remotely resemble the previous bull market tops. He goes on to conclude that while the dip was unexpected, it was necessary to keep the bull market sustainable. We have a large leverage reset and a wipeout of weak hands. At this point, it's just going to take some time for those young coins recently sold to find a new home. Still bullish for the remainder of the bull run, and I agree 100%. I am still extremely bullish for the king of all crypto. I feel this is just the midway point, and we're likely to reach the next leg up. And once we do, we could surpass $70,000. So I feel this is just a healthy correction, nonetheless, to shake out those weak hands. And before I break down our next story of the day, Bitcoin could be a better store of value than the dollar, says Singapore's largest bank, as well as will Bitcoin still hit $100,000? Crypto analyst PlanB analyzes the current state of the Bitcoin market. But first, let's take a quick look at the overall crypto market cap, sitting just above $1.4 trillion with $158 billion in volume in the past 24 hours, and the Bitcoin dominance back on the climb at 46.2%, with the Ether dominance at 17.1%, and the current Bitcoin market cap is currently below $700 billion, with the Ethereum market cap just above $247 billion. Now checking out the top gainers within the top 100, we have Shiba up 11.11%, we have Theta Fuel up 5.6%, trading at 26 cents, and the rest are stable coins because all the top cryptos are currently correcting and in the red. Now out of this list of the biggest gainers and losers, which altcoins are you currently most bullish on during this bull run? Let me know in the comments right down below. Now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 14 in extreme fear. Yesterday was a 12, last week a 20 in extreme fear, and last month a 55 in greed. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity, like we're witnessing right now, BTFD buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. All right, now let's break down our next story of the day. Singapore's largest bank, DBS, may favor Bitcoin over the US dollar as a store of value. The chief investment officer at DBS recently published a note to investors, which makes the case for Bitcoin as a more effective store of value asset than US-based fiat. DBS argues that the global central banks continue to inject supplies of fiat into the economy. Bitcoin could offer an alternative for investors who do not wish to be in the whim of the dollar debasement. Quoting them here, indeed, the exponential rise in Bitcoin prices are rivaled only by the meteoric expansion in the balance sheet of the largest global central banks around the world, the US Federal Reserve, the European Central Bank, which is the ECB, and the Bank of Japan, and BOJ, as well as the People's Bank of China, the PBOC. Such trends would unequivocally drive demand for alternative currencies, even unorthodox digital forms that would potentially represent a store of value more faithfully than physical dollars would. Within its evaluation, DBS notes that Bitcoin's decentralized nature and its limited supply work together to make Bitcoin a strong store of value option for investors. The team points out to it because of its scarce supply, Bitcoin is more aptly described as a crypto commodity and one that is easily transferable at that, notes DBS. Even the best quality diamonds would not hold a candle to Bitcoin's portability value. This is a pretty big deal coming directly from the largest bank in Singapore. The bank adds that Bitcoin appears to have a low correlation to other assets, meaning that it could help investors diversify their portfolio. However, DBS acknowledges that Bitcoin has scaling issues due to its reliance on the proof-of-work consensus mechanism, which requires an exorbitant amount of energy to confirm transactions, and additionally, the energy the network uses for transactions and for mining Bitcoin, remarks DBS, could be of some concern. As we all know, recently, Elon Musk shared some FUD that he would not be accepting Bitcoin as a form of payment for his Tesla due to energy consumption, which is all shenanigans at the end of the day. DBS also cautions that Bitcoin is a volatile asset that may face regulatory risk in the future. The bank also suggests that if Bitcoin achieves status as a reliable asset outside of the control of the state, it is unlikely that these same central authorities would stand idly by without defending the monopolistic control over the various currencies that Bitcoin threatens to supplant. All I know is this: they cannot control Bitcoin, they cannot stop it due to its decentralized nature. All they can do is manipulate and control the puppets such as Elon Musk and continue to spread FUD. Now for some very powerful words they share. Despite its relatively uncertain future, Bitcoin could be at the forefront of ushering in a monetary revolution, concludes DBS, which is an opportunity fiat money cannot buy. Welcome to the Bitcoin revolution. And before I break down our final story of the day, will Bitcoin still hit $100,000? Crypto analyst PlanB analyzes the current state of the Bitcoin market. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 785 plus videos right here on my YouTube channel. I have some very helpful resources for you to plug into, including my daily letter, which goes out to over 30,000 subscribers every single day. To subscribe, visit letter.cryptonewsalerts.net. Also have a blog I update daily, which could be found at cryptonewsyes.com. Also be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts every single day, including weekends, just like this. You can also find me on all the major podcasting platforms, from Spotify, the home of the Joe Rogan Experience, to Apple's iTunes. You can also follow me on Twitter. My Twitter handle is Crypto News Yes. And for those of you on Facebook, I do have a private crypto Facebook group entitled Crypto Alchemy. To join it, click this link, request to join. I'll be sure to plug you in. And for those of you on Telegram, I do have a private crypto Telegram chat, which is uncensored. To join it, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. And for those of you on TikTok, be sure to follow me there. All right, now let's break down our final story of the day. The widely followed analyst, known for being the first to apply the stock to flow model to Bitcoin, is sharing his thoughts on the state of the Bitcoin market after the leading crypto sharply fell from its all-time high. In a new interview he did with Scott Melker, the Wolf of Wall Street, PlanB emphasizes he believes that his stock to flow models, which predicts that Bitcoin will eventually hit 100,000 or even 288,000, are still intact. Quoting him here from this interview, the short answer is, I think we're somewhere halfway. I'm very data driven, so I don't make that up, but I read into the data. I looked to my stock to flow models, the stock to flow model and the stock to flow X model, and both models actually show we're certainly not at the end of the cycle. We still have some room to go until $100,000 on average, or $288,000 on average if you follow the stock to flow X model. That's right, according to PlanB data, other than his stock to flow models are suggesting that the Bitcoin bull market is not yet over. Quoting him again, it's not only the stock to flow models that I look at, I also look at on-chain data, and I make my own on-chain indicators. I don't use the Glassnode or Coinmetrics, which is awesome by the way, but I extract all the data from my node and crunch it. If you look at the on-chain data, which is a treasure for making signals and picking up patterns, it is very clear that we're somewhere halfway, with a shortage in coins building up to levels that were exactly half of the shortage levels in 2017 and 2013. From those two angles, pretty sure we haven't seen the top yet. In spite of Bitcoin's collapse from its recent all-time high of almost 65,000 to a 90-day low of about $30,000, PlanB highlights that he sees the supply side crisis happening under the hood. Quoting him again here, I do see the shortage on-chain as well, not only on the exchanges, but also on-chain. The shortage is real and is building and building. It has been building for months now and accelerating since December. On Wednesday, PlanB reiterated that validity of the stock to flow and stock to flow X models, as he says that Bitcoin is well within the range of his models, even after the largest Bitcoin crash since the coronavirus-induced pandemic. Quoting him again here, seeing comments like stock to flow broke or stock to flow invalidated, or what does it mean? I guess I have to explain. The charts show that Bitcoin is well within the admittedly wide stock to flow model bands. I might start worrying if Bitcoin is below the dark blue band for multiple months, like the beginning of 2019. So how many of you agree with stock to flow and stock to flow X models? Stock to flow X predicts a $288,000 Bitcoin price before the end of this year. Do you feel that is likely to happen? Let me know your thoughts in the comments right down below. And to check out this entire interview between PlanB and Scott Melker, the Wolf of Wall Street, entitled Bitcoin Will Hit $288,000, check the show notes below the video in the description. Now for a quick recap of what I covered with you right here in today's show. Bitcoin price slips below $34,000. I shared with you the key levels to watch out for both support as well as resistance. Also shared the latest from Lex Mavosky, who points out that the Bitcoin miners aren't selling right now, and Alistair sharing the reasons why he is buying and not selling. Also in today's show, I shared that these entities are buying the Bitcoin collapse. According to on-chain analyst William Clemente, we're talking about massive whales and institutions accumulating. That's right, the big whales and institutions are taking advantage of this dip. Also in today's show, I shared that Bitcoin could be a better store of value than the dollar, according to Singapore's largest bank. This is a pretty big deal coming from them. Also in today's show, we discussed, will Bitcoin still hit six figures? Well, according to PlanB, yes, Bitcoin is still on track with the stock to flow model and stock to flow X, which predicts a $288,000 Bitcoin price before the end of this year. So where do you feel the Bitcoin price is likely to go next? How low will she go? Let me know your thoughts in the comments right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium crypto news alerts every single day, including weekends, just like this. And real quick before I go, I want to give a special shout out to BlockFi, the leading provider of financial products and services for crypto investors. Here's where you can put your crypto to work. They're currently paying out a 5% annual percentage yield on Bitcoin, so you can literally have your Satoshis work for you. They're also paying out 10% APY on stable coins, and their other flagship product is a crypto-backed loan. You ever wonder, how can I access fiat liquidity without selling my precious crypto? Well, look no further, because with BlockFi, you can get an interest rate as low as 4.5% without having to sell any of your cryptocurrency. And also have a special promo running right now where you can receive up to a $250 crypto bonus with a deposit of $100 or more. To take advantage of this, use my referral link in the description right down below. It'll take you here. Click this yellow button that says sign up, and you'll notice the referral code already pre-populated for you to take advantage of this special bonus. So what are you waiting for? Click the link right down below. Let's start stacking those sats, and I look forward to seeing you on tomorrow's episode. Peace.